Hello, my dear student. This is your teacher, Sir Haris Bhatt, and I'm here again in front of you with something very, very new and exciting for you, and which you are going to love for that. Believe me, you are going to have a uh, excellent day today because 2 days back we were having our paper on October 17. That was variant 22, 21, and 23. So today, yes, you are right that I am going to solve that paper in front of you. So you are seeing Learn Accounting with Sir Haris. And today I am going to solve the paper which has come 2 days back. AS Accounting, right? 9706 AS Accounting, Fundamentals of Accounting, Paper 2, Variant 22, Variant 22, October, November 2024. Yeah, October, November 2024, Variant 22. So let's start the first question, obviously. The first question has come from Sole Trader, along with some part of the incomplete record, actually, with accounting concepts. Second question has come from ratios. I'm going to solve it in the next lecture. Third question has come from company accounts, in which we have to go reverse also. And there was a revaluation downward also. So it is quite a typical question, difficult one also. And inshallah, I'll solve it in the third question. And the fourth question is from margin costing. And we have to prepare the margin cost statement. Inshallah, we'll do that. So let's do the first question of October, November 24, variant 22. So this is a gift from me, from my side for you. And keep watching my channel and do subscribe my channel, right? And looking forward to see my next guest in P3 and P4, hopefully. So let's talk about the question. Ahmed is a sole trader. He does not maintain full accounting records. He provided the following information for the year ended 30th June 2024. Payments and receipts during the year included the following: carriage outward, which is an expense, obviously. Cash sales are given 5,200. Electricity charges paid, general expense paid, motor expense paid, payment to credit suppliers, receipt from credit customers, rent paid is also given. All purchases are made on credit. Obviously, if it has been written that all purchases are made on credit, it means that you have to prepare purchase ledger control account, PLCA, in order to find credit purchases. And all the credit purchases are basically our total purchases. Assets and liabilities include the following: 8% bank loan, which was not in 2023. We have taken that bank loan of 3,000 in 2024. Allowance for irrecoverable debts, you may call it as allowance for doubtful debts, one and the same thing, is 1055 for 2023, or provision for doubtful debts. And for 2024, it is not given. Inventory opening is here, closing is not given. Maybe it is written over here on fourth point. Other payables, rent accrued 600. Opening rent accrued will be subtracted, will be added. Will be subtracted, obviously. Why? Because accrued expenses at the end of the year are going to be added, and accrued expenses at the start of the year are going to be subtracted. I'll go for the preparation of a ticket now. Electricity, again, accrual or owing are given. Other receivables, rent prepaid at the end is given 1,800 regarding rent. Trade payables are given opening and closing. Trade receivables are given opening and closing. It means that we have to prepare SLC and PLCA to find credit sales and credit purchases. Inventory at 30th June was valued at 15,880. This includes damaged items costing 960 that will be sold for 1,100 after repair cost of 340. So always remember that this is the concept which I have told you, that inventory valuation will come with some part of the sole trader. The inventory is valued at cost or NRV, whichever is less. So NRV is going to be market value minus cost to sell. So if we talk about the inventory market value, or we will talk about the NRV. So NRV for this question is going to be how much? Let's see. That will be sold, damaged goods costing 960 can be sold for 1,100 after repairing cost of 340. So I will do 1,100 minus 340. We are going to get 1,100 minus 340. Let me calculate it, obviously, for you. Minus 340. And the answer is going to be 760. So the answer is going to be 760 regarding the 760 regarding the, what should I say, NRV. So regarding NRV, the item is going to be 760. Fine. Let's move forward. The next thing which is there, that is going to be the cost is 960 and NRV is going to be how much? Cost is 960 and NRV is going to be 760. So we have to see what that inventory is valued at cost or NRV, whichever is less. It means that we have to record the inventory at 760 rather than at 760 rather than 960. So if we just see the question, the inventory includes 15880 includes a damage inventory of 15880 includes a damage inventory of 960. So I will subtract 960 because that is the cost and NRV is less than that, that is 760. So I will subtract 960 and I will add 760 to get my correct value of closing inventory. So let me calculate it. 15880 minus 960 plus 760. So the answer is going to be 15680. So we have calculated the inventory, that is 15680 is the right value for the inventory which we have calculated accordingly. Now let's prepare because let's see the requirement first also so that you will have an idea. During the year, Ahmed took goods costing 420 for his own use, that is goods drawing. Entry will be drawings debit and purchases credit. So that is going to be subtracted from purchases, obviously, and it will be a part of drawings also. Bad debts is 300 is to be written off. It is yet to be subtracted, it means. And then you have to prepare the allowance for irrecoverable debts at the same rate as in the previous year, right? So 8% bank loan was taken out on 1st April. No interest has yet been paid. If you talk about 8% bank loan, where is bank loan? Let's see. Here is 8% bank loan, 3,000, and it is taken this year, and the interest rate is 8%. But our financial year ends at 30th June, and we have taken this 8% bank loan on 1st April. So it means that the interest on loan you will pay, that is going to be paid for April, May, June, 3 months, right? The 3,000 into 8% into 3/12. We'll go for it. Ahmed started the business on 1st July. On that date, he purchased a motor vehicle for 24,000 and fixture for 3,200. No other non-current asset have been purchased. There is nothing new in this normal way because they are supposed to be depreciated and we have to write it in the expenses. Motor vehicle 20% under reducing balance method and fixture and fitting 10% under straight line method. Motor expense paid included 1140 for motor insurance for the 12 months to 31st August, right? So we'll discuss when I'm going to record about the motor expense. First, see the requirement statement of profit and loss, right? So let's talk about first the 7th part, that allowance for doubtful debts. We have to prepare for irrecoverable debts, but the percentage is not given. He is saying, examiner is saying that you are going to supposed to use the same percentage. So let's see. The allowance for doubtful debts for 2023 is 1055 and the trade receivables are 21100. So let's calculate how we calculate it actually. 1055, we will do it, write it on the calculator, divided by 21100 multiplied by 100, you will get the percentage, the previous year percentage, and that is going to be 5%. So 5% is going to be the percentage of provision for doubtful debts or allowance for irrecoverable debts, which is going to be used for this year also. The same percentage on trade receivables will be used for this year. But having said this, you have to subtract the bad debts first, irrecoverable debt also, from which is 300 before calculating the provision of 5%. So let's start the question now. First of all, in order to prepare the statement of profit and loss, we need to have sales, obviously. In order to find sales, you have to prepare sale ledger control account. So let me prepare. I am writing it SLCA rather than sale ledger control account. So let's prepare the SLCA. So SLCA, I will write over here the sign of dollar. Here I'm going to write the brought down. Here I'm going to write the carried down. Here comes the receipt from customers or cash receipt from customer. One and the same thing. RECEIT from trade receivable, I must write, because just to abbreviate it, let me make it simple for me. And then I will write over here credit sales. But remember that we have some bad debts also. So we have to write irrecoverable debts also over here because that is given in the question, and we have to write it over here also because bad debts is also a part of sale ledger control account. But having said this, you have to be very clear in preparing this that bad debts is not yet subtracted from the trade receivables, right? So it means that whatever sales you are going to have, we still have to go for the calculation of irrecoverable debts, right? To find the credit sales. So how we are going to go with that? Let's calculate it without the bad debts because of the reason that the amount of uh, trade receivables is still included the bad debts. So how I'm going to interpret this point actually, it has come in 2016 also with a little bit change. Trade receivables are 18,500. So how I'm going to write it down? Let's see. Irrecoverable debts are going to be 300 and the carried down of trade receivable are going to be 18,200. Sir, how come? Because the trade receivable at the end, we haven't subtracted 300 of irrecoverable debts from the trade receivables. So when you will pass the entry bad debts debit or irrecoverable debts debit and trade receivable credit, so trade receivable are going to be credited because of irrecoverable debts and it is not yet subtracted from the carried down. So it will be recorded as an expense also, but it needs to be subtracted from the it needs to be subtracted from the closing trade receivable to find the amount of credit sales, right? So let's see what is the brought down of trade receivables. That is 21100. This will be an important part of the receipt from trade receivable will be given in the bank account. So where is the bank? Receipts, payments and receipts. Receipt from trade receivable were given, credit customer 102600. I'll write over here 102600. And the difference is going to be the credit sale. So let me go for the total of this. Yes, if you want to subtract 18,500 afterwards and then you want to subtract 300 out of them, that depends upon your choice. It is possible. So 102600 plus 300 plus 18,200 or 18,500 in total, you will get 12100. 121, sorry, 00. 121100. Sorry. 121100. I will write over here also 121100. I will subtract minus 21,100. So the credit sales is going to be 1 lakh. Right? If you are going to write 18,500 over here, then you must consider that you need to subtract bad debts from the trade receivable before calculating the provision because the actual trade receivable at the end of the year is going to be 18,200 rather than 18,500. So it depends upon your choice. Next, now I'm going to find the total sales to be written in the income statement. And total sales is cash sales plus credit sales. So let's see, cash sales is given 5,200 and credit sales, we know that is going to be 1 lakh. So the total sales you can calculate easily. That is 1 lakh 105200. 1,05,200. Now I'm going to prepare the PLCA or you may say purchase ledger control account in order to find credit purchases. So let's calculate it. In order to find credit purchases, I have to write obviously the brought down trade payable at the start, which is written on the credit side, and it is trade payable at the beginning. It's a liability, so it is a credit balance. Carried down will come on the debit side. It is also a credit balance. Payment to trade payable will come on the debit side, and the difference is going to be your credit purchases. So the difference is going to be your credit purchases. So let's solve it, do it. So if you just see the trade payables at the start, that is 8,800, and the ending trade receivable or at the end 6,300. So 8,800 trade payables at the start and trade payables at the end is or are 6,300. So I'll go for the total of this, and the difference is going to be written payment to trade payable. Credit purchases we will find. Let's see payment to trade payable. It is in the payment to credit suppliers or trade payable, one and the same thing. That is 6,1,240. So I'll write over here 6,1,240. Now I will go for the total of the debit side, and I will subtract the total, and then through this I am going to get the total of the credit purchases, right, which is going to be 58,920. So let me write it over here. 58,920. Let me see the total actually. Though it is not required, total is not required. Plus 6,300 minus 8,800. So 58. Just a minute. If I have written something wrong, let me check it. Payment to credit supplier is 6,1,240. That's fine. And is there anything else regarding? Okay. Right. So the answer is going to be 58,740. So the purchases are 58,740. We will not write goods drawing in the purchase ledger control account. We will write goods drawing separately when we are going to subtract it in the income statement. It should not be a part of the same ledger control account. Then we don't need to prepare any. We can prepare the expense and income account. I'll prepare it for you. Like rent accrued, that is quite easy. But let's prepare the rent account. I'll prepare it for you, like here. So rent account, I'm going to prepare. You can say expense account. You can say like that also. So what is the, what is the format of the expense account? Format you may say, or how we are going to prepare it. Prepaid comes over here. Then prepaid carried down will be part of this. Again, this is just a, so that's why I'm not writing any brought down carried down because it's a working only. Now accrued carried down, cash figure, whatever I have paid will come over here. And the difference is going to be written with the profit and loss account name or statement of profit and loss, which is to be written, which is supposed to be taken to the statement of profit and loss under the heading of expenses. So let's see that rent accrued opening is given, and that is 600. I will write here 600. Then cash figure rent paid is given here 16,800. I will write here cash figure. Just a minute. 16,800. Prepaid brought down is not given. Accrued carried down is not given, but prepaid rent prepaid carried down is given. That is 1,800. So I will write here prepaid carried down rent here. It is 1,800, and the difference will be written with the name profit and loss account, and that is the expense which is supposed to be written in the what should I say? 6-1. Okay, what should I say? Just a minute. Now I'm going to write the profit and loss account figure of the rent, and that will come 14,400. So 14,400. I'll go for the calculation also. Why is it so? Because you know that I'm solving the question for the first time without any solution. So obviously I should have some calculations. Try to get some calculation with you. Yes, it's possible. It is A levels, my dear. I can do mistake. There is nothing harm in it because this is A levels. That's why I'll always ask you, prepare all the past papers. You have to do all the past papers. Otherwise, counting will kill you without the past papers. Even you know the chapter or you don't know the chapter, right? There is nothing in between. There is nothing in between. Sir, I have some idea about depreciation, but I am, sir, not very clear. So it means that you don't know depreciation, my dear. That's it. Either this way or that way. There is no in between regarding accounting, regarding this subject. I'm telling you. Okay. So let's talk about electricity. Accrued electricity is given 130 brought down, and 90 is going to be the carried down. So 130 and 90 is going to be the carried down. Payment which is made for the electricity. Let's see. Electricity charge is paid 1920, which is given in the payment and receipt 1920. Let me write it over here. 1920. Now I'll go for the total, and the difference will be written with the name profit and loss account, which is supposed to be written under the heading of expenses, and that is going to be calculated 1880. Okay, so that's fine. Now, one more thing which is still relevant to the question: general expenses paid are 3600. That's fine. Motor expenses paid are given. If opening or closing of any expense or income is given in the question, it is better to prepare the T account. Don't go for the working, my dear. Don't go for the working, right? Try to prepare T account. That would be easy, and that will lead you that you won't, there will be no mistake, leading to a non-occurrence of error, actually, right? So motor expenses paid include 1140 for motor insurance for the 12 month to 31st. Remember this, that our expenses or our financial year ends at 30th June. So July and August, 2 months motor expense has been paid in advance. So that is prepaid motor expense. And how we are going to calculate it? Because 1140, which is included in the motor expense, that is for 12 months. So how we are going to calculate it? I will calculate it over here. 1140 multiplied by 2/12. And that motor expense is supposed to be taken as prepaid. And that amount of prepaid is going to be subtracted because it is prepaid. So that is supposed to be subtracted from the motor expense. So motor expense paid are given 4250, right? And we will subtract this amount 4250. If I will write over here, okay, we'll do it again, no problem. Let me calculate it over here first. 1140 into 2 divided by 12. The answer is 190. So 4250 minus 190 is going to be the answer for our motor expenses to be written in the income statement or to be written in the statement of profit and loss. And that is going to be how much? 4060. Okay. Now let's prepare the income statement. Let's go for the preparation of the statement of profit and loss, which is the part of the syllabus. So I will prepare it in a separate screenshot. Statement of profit and loss. Spellings have done little wrong of statement, no matter. Yes, I'm an accounting teacher. I'm not an English teacher. And I don't believe also that my English is that good. But if we talk about accounting, so you know that, inshallah, I'm going to upload the guess of, I've already uploaded the guess of P3 and P4, and I will little bit correct it also, little bit change it also, maybe on Monday, hopefully, right? So that you may find it little easier, or maybe tomorrow or so. So we'll start from revenue. We have calculated revenue already. Total sales are given 105200. So we can write it down over here. 105200. Always remember that if there is going to be sales return, we have to subtract that sales return from sales. At any cost, we have to subtract that sales return from sales. If purchase return are given, it will also come on the purchase ledger control in purchase ledger control account, and will also be subtracted from the purchases. That is true. There is a two-side effect, right? You have to go for a two-side effect. So let's do that now. Let's do it. And less cost of sales. We'll start from opening inventory. I'm using the abbreviation not because of the reason that I can't write it, because why to spend much time with that? So add purchases, I will subtract less purchase return, but here I will subtract goods drawing. It is better to subtract goods drawing right in the format rather than writing it in the PLC. So let's see opening inventory that is given 12640, and write over here with you 12640. Add purchases. We have calculated purchases already by preparing PLCA. The credit purchases 58740. Total I have not given, yes, because that is just the working. It is not a requirement in the question. 58740. Now let's see the amount of goods drawing. What are they? Goods drawing are 420 for his own use. So I will subtract 420 from here with a negative sign, 420, and then I am going to subtract the closing inventory to find the gross profit. We have already done closing inventory correctly. How come? That inventory is valued at cost or NRV, whichever is less. So we can calculate the closing inventory from, we can subtract it from here. Every particular mark is awarded also along with the amount I have written where it is required. Then the mark will be given. So the closing inventory NRV is 960. Oh, sorry, cost is 960 and NRV of the damage inventory was 760. So minus 960 plus 760, we will get 15680, 15680, which is subtracted. And through this, we have found the cost of sales. And through this cost of sales, we are supposed to subtract. Let me calculate it. As discussed, I am solving it with you. No solution I am having and no solution I am going to get from anywhere. 12640 plus 58740 minus 420 minus 15680. The answer is 55280. Let me write here. 55280 is the answer of cost of sales. And now this cost of sales is going to be subtracted, right? Let me calculate it. 105200 minus 55280. So the gross profit is 49920. Right here, 49920 is the gross profit. I am using the abbreviation, but you have to label it properly, fully. You have to label it fully. There is no abbreviation should be used in the labeling. Always remember this thing. Next is allowance for doubtful debts. Let's check it out. The bad debts are 300, so 18,500 are the trade receivables from which 300 has not yet been subtracted. So what I will do, I will subtract 18,500 minus 300. We already got that our trade receivable are 18,200 and the, what should I say? And the provision is going to be 5%, which was the same provision as in the previous year. The answer is 910. So let's see on the question. We need a provision of 910 and how much provision we have already have, that is 1055. We need provision of 910, but we have provision of 1055. It means that we have excess provision than required. It means that we have excess provision than required. So the provision is going to be decreased. Rather than increase, the provision is going to be decreased. By how much? By 145. So I'm going to decrease the provision by 145, and that provision, decrease in provision, will be added in the gross profit. That is going to be, we have 2 marks for that. One, how much? 145. Let me add it. And then we are going to subtract the expenses from it, all the expenses, because expenses are not given. Sorry, other income is not given. 49920 plus 145. The answer is 50065. So now less expenses. And in expenses, I'm going to write first. In expenses, I'm going to write the carriage outward because I don't want to miss it actually. Because carriage outward is such kind of an expense which normally can be overlooked by the student and marks, you will deduct the marks actually. So carriage outward, if you just look at the question, that is 1040. So let me write the carriage outward, that is 1040. Now I'm going to write the rent. Then I'm going to write the electricity because we are prepared for these 2 accounts. So it is easy to write them first because we have gone for the preparation of the account to find the profit and loss account figure or income statement figure by preparing the rent account. So the income statement figure is going to be 14,400 for rent and 1880 for electricity, already calculated. So 14,400 and 1880 for electricity. Now let's talk about the motor expenses. We have calculated the motor expenses also. We have gone for the working for that because motor expenses are given in the question, but there were 2 months motor expense were prepaid, which needs to be subtracted, and 4060 is the amount of motor expenses. Don't worry, I'll explain it again. I'll explain it again fully because maybe you have vulnerable memory. So let's see. The question has been asked you that the motor expenses paid 1140 for motor insurance for the 12 months to 31st August. So this 1140 is basically 12 months motor insurance, and 1140 into 2 over 12, July and August. That 2 months does not relate to current financial year. So it needs to be subtracted. So 1140 into 2 over 12, that becomes 190. 4250 is the motor expense minus 190. So 4060 is the motor expense figure to be written in the statement of profit and loss. Next, I'm going to write other expenses, which are general expenses paid, 3600. There is no adjustment of general expenses paid. So I will write it as same as it is written. So general expenses, that is 3600. Okay. Next is going to be our irrecoverable debts, because these irrecoverable debts are the debts not written off. Irrecoverable debts not written off. It needs to be subtracted from the trade receivables, and it also needs to be written under the heading of expenses because the double entry has not yet been passed through, has not yet been recorded. So general expenses I have irrecoverable debts I have recorded. Now I'm going to write the interest on loan, bank loan, maybe 8% bank loan, 3000. So the interest on bank loan is also our expense. So I'm going to write it here. That is interest on bank loan. How I'm going to calculate it? I know that the bank loan is 3000 and the loan has been taken on 1st April, and our financial year basically ends at 30th June. So the loan is going to be 3000 into 8% into 3 over 12. How come, sir? My dear, 3000 into 8% into 3 over 12. That means that our interest on bank loan is going to be for April, May, and June, right? So rent we have written, that is electricity we have written, and motor expense, that is fine, general expenses. And now we will go for the carriage outward. We have written depreciation actually is the important part. So loan interest, let me calculate it for you. So 3000 into 0.08, 240 into 3 over 12, that is 60. So interest on bank loan is going to be 60. I was not having the, space actually for the calculation. That's why I written it a little bit aside. Okay, next, move on. Everything we have written, all the expenses, we just check it out. We have gone for them. We have calculated the inventory part also. Drawings, purchases, we have subtracted from bad debts we have recorded. Provision, decrease in provision we have recorded already from, let me calculate it, the provision again. Okay. Yeah, we have calculated already. 8% bank loan interest, we have not depreciation part, motor expenses already done. So Ahmed started the business on 1st July 2022. On that date, he purchased a motor vehicle for 24,000 and fixture and fitting. So fixture and fitting, we have a depreciation of 10%, and the cost of fixture and fitting is 3,200. So quite easy. I will write depreciation on fixture and fitting, that is 320. How comes that? 3,200 into 10% is going to be 320. Quite easy. 3,200 into 10%, 320. Now we have to calculate depreciation on motor vehicle 20% using reducing balance method, where the amount of depreciation, where the amount of motor vehicle is going to be 24,000. Let's find it out. 24,000 is the amount, and we have purchased it on 1st July. So it means that it has been depreciated by reducing balance method by 20% from July 2022 to June 30th June 2023. And then again, it has been depreciated, supposed to be depreciated for the next year from July 2023 till June 2024, which is our financial year, So how we are going to calculate it? Let's see. Let me see what is the percentages. For motor vehicle, that is 20%. So 24,000 multiplied by 20%, that will become 4,800. Then again, this is the depreciation for 2022 to 2023. Now I have to calculate depreciation from 23 to 24. So 24,000 minus 4,800, because it is the method is reducing balance method, and then I am going to calculate 20% to calculate the depreciation for the current year. So let me do that. Minus 4,800 into 0.2, that is 3,840. So let me write it down, 3,840. Now I'm going for the total of these expenses, and the total will be subtracted to find the profit for the year, or you may say profit for the year, or whatever you want to call it as. That is going to be the profit which needs to be calculated by going for a solution. So let me see if we have done all things correct. That is 16,800 with the rent expense. Let me see the rent, how much amount is 16,800. That's fine. I'm expecting something to happen. So total karte hain. Let's do the total of the amounts we have, and let's calculate it, that what is the total of the expenses, and then we are going to go for the, our question is going to complete. So let's do it. I have my calculator with me. 1040 plus 14,400 plus 1880. You can do it with me because I told you that I'm solving it for the first time. So I'm a little bit, you may say, curious, more cautious. 360 plus 320 plus 3840. The total expenses are 29,500. So if you subtract 50065, 500 minus 29,500, you will get the profit for the year 20565. So the profit for the year is going to be 20565. Because of the space was not there, that's why I have written it on the right side, but I have completed the question. The year for you. For the spelling galat ho gaya, no matter, doesn't matter at all for this thing. So 20565 is going to be the answer. Let me go for the total of expenses once again, so that I should not make it incorrect because of any other problem. 1040 plus 14,400 plus 1880 plus 4060 plus 3600 plus 260 plus 320 plus 3840. 29,500 is the right answer. 506. We will subtract it. You will get the answer. 50065 minus 29,000. 20565. Okay. Now let's move on to the next part of the question. I hope so you will get it and you have taken the picture or whatever. The next part, that is the working, and we have already gone for all the working for this, for revenue, for cost of sales, for rent, electricity charges, motor expense, depreciation, other workings are required. Now we have to go for this. Explain the reference to an accounting concept. Why adjustment 5, 6, and 11 on page 2 were to be made to the financial statement, right? So we have to go for the adjustments actually. That is the accounting concepts. The first is goods for own use. Concept is business entity concept. And business entity concept says that business is separate from the owner. Only transactions and events relating to business are recorded in the business books, right? So if the owner is going to take anything for his personal use, either cash or goods, that will be treated as drawings and it will be subtracted from his capital rather than treating it as a business expense. That is the concept of business entity concept. I'm not going to write it down because I don't want to take much of your time. I want to upload the question as quickly as possible. I repeat again, goods for own use. The concept is business entity concept. The concept is business entity. Sorry, spelling mistake. right? And business entity concept says that business is separate from the owner, right? And business is separate from the owner. Only transaction, okay, only transaction relating to business are recorded in the business books. Relating to business are recorded in the business books. Right? Drawings is not an expense of business. So it is subtracted from capital. That is not the expense of business, so it needs to be subtracted from capital. Drawing should not be treated as business expense, either cash or goods. Okay, so that's why goods for own use pay, we used to have a concept of business entity. Let's move forward. What is the next one? The next one is irrecoverable debts. The concept which we are going to use is matching or accrual. You can use both concept, matching, accrual, or prudence even, because profit should not be overstated actually. That should be also be a part of that, can be a part of that, right? So you can write it down. Matching concept says that expenses of a particular year should be matched with the income of the same period to find profit and loss of the business. That irrecoverable debts, bad debts, is supposed to be written off in the period to which it relates, in which the trade receivable has denied to pay the amount and the trade receivables are unable to make the payment on the due date. That is why that has become bad debts, and that is an expense for the business. So matching concept says that expense is recorded in the period to which it relates, either it is paid or not. And income of the same expenses should be compared with the income of the same period to find profit and loss of the business. Otherwise, the profit will be wrong. Next concept is motor insurance. So motor insurance, if you just see that that was a part of motor expense and 2 month motor insurance was prepaid. The concept is accrual concept. Accrual concept says that expenses of a particular year should be recorded in the period to which it relates, either it is paid or not. Matching was little bit previous one. I think I have given the same statement over there also, because accrual do apply on bad debts also. But motor insurance says that that 2 month motor insurance was relating to the next year. So that expense does not relate to this current period. Expenses of a particular period should be recorded in the period to which it relates, either it is paid or not. Same is the case. Income is recorded in the period in which it is earned, either it is received or not. So that is the basis of accrual concept, because of the reason that that particular expense does not relate to the current period. It is a prepaid expense. It should be recorded in the next period, because the 2 months rent is not a part of the current year expense, right? Let's see the next one. Okay, next one is not, how many? 5, 6, 11. Okay, that's done. Next is the Ahmed has been offered the opportunity to purchase larger premises for 85,000, which would allow him to increase the sales revenue of the business. As he does not have sufficient personal funds to make the purchase, he is considering two options. So Ahmed has been offered the opportunity to purchase larger premises. Obviously, when the premises is going to be large, we have more premises, he can produce more goods, he can sell more goods, and his sales is going to be increased. And that is the purpose of having large premises, because he wants to increase the sales revenue. But because of the funds, he has problems. So he has gone for two options. Apply for a bank loan to cover the whole purchase price. The bank loan would be repayable over 10 years and interest would be paid at 8% per annum. So if you just calculate that if he's going to take the bank loan, that is a non-current liability. The non-current liability will increase and he has to pay interest on that non-current liability per annum, that is 6,800. So the profit for the year will decrease by 6,800 on annual basis because he has to pay interest on the loan for the next 10 years. Secondly, profit will decrease because the interest expense or finance cost will increase. Secondly, the bank loan is a non-current liability which has to be repaid at some stage. Then maybe the bank, he might find it difficult to take the loan because he has to pledge some collateral to take the loan, and he has to also show his financial statements. So secrecy would not be maintained because of that. And then the bank will give Ahmed a loan because already he is working as a sole trader. So this is the part. But bank loan option, if he is finding liquidity issues, then bank loan option is acceptable, right? Because currently, if we will see the question, he is already having a bank loan. Let me check it out. I believe like that. Yes, he is already having a bank loan of 3,000 only. So that amount, which is going to be taken right now, it is quite a large amount. So that 3,000 loan is quite simple, but 85,000 is a big amount. And the percentage is the same 8%. So 6,800 of interest cost will decrease his profit by 20565 minus 6,800, almost we may consider 30% of the profit will decrease because of the finance cost, right? And what is going to be the other option? Ahmed brother has offered to join as an equal sharing partner. He will reduce all of the cash required to complete the purchase in exchange for a 50% share of profit. So if he is going to go for a 50% share of profit, what will happen actually? That number one is this, that his responsibilities will be shared. Maybe Ahmed brother will bring more skill and expertise to the partnership, but he has to, he has to bear the 50% profit share will be taken by him, right? But it depends either the business is going to have how much profit the business is going to get in the future. So he's bringing the cash, all the cash also. So maybe because of him, the profit will increase and we are going to have a partnership, which is a little, a better large scale business than sole trader, right? And because he has to go for an equal share, he has to give an equal share, then maybe, the decision making will be difficult. There can be conflict between the partners, right? Conflict between the partners can also arise. So we have to take an option. I'll go with the option, the bank loan, because we don't have that much bigger loan which we have taken currently. The loan amount is not that high up till now. So we can consider the bank loan, which is, I believe, that is a much, better option. Then his control, he will lose his control also because he has to take decision along with the decision of his brother, right? So we have to consider all these points. So this is how we have gone for this question. I have solved the question in front of you. Now I'll go for the second one, as I discussed with you, that is going to be the question of ratios. And the third question is going to be for company accounts, which is a difficult one, I believe, right? I told you that conflict and disputes may arise, right? So I believe that we should go for the loan because we have enough years, 10 years we have to pay for the loan. So we can do it easily. So this is the C part. Let's move towards the next question. I'll go with the next question in the next class. So that is October November 24, question 1. Thank you very much for your income.